What are some of the dumbest lottery scams people try to pull? Let's get started with number 6, the stolen ticket. Carly Nunes tried to illegally claim a $3 million lottery ticket that belonged to a customer who'd bought the ticket at her shop earlier that day. The drama all started when Nunes sold Paul Little 2 state lottery quick picks for the Mega Millions lottery and 2 for the mass cash lottery, along with a bag of chips. Unfortunately, Little left the tickets behind at the shop. 45 minutes after forgetting the tickets, another customer found them and handed them over to Nunes. Later that evening, the winners of the lottery were announced, and one of the tickets had won $3 million. So, she hatched a plan with Joseph Redham, a co-worker, to keep the ticket herself and cash in. The two, along with Nunes' boyfriend, took the winning ticket to the Lottery Commission's headquarters. The officials at the lottery office began to suspect some shady business when they heard Nunes and Redham loudly arguing in the lobby about how they were going to divide the winnings. Apparently, Nunes wanted to give Redham only $200,000, but he felt that he deserved more. When lottery officials heard these two greedy blabbermouths, they told Nunes they would investigate the validity of the ticket and get back to her once the investigation concluded. Investigators were eventually led to the security footage that showed Paul Little purchasing the real ticket and Nunes snapping it up later. Once those facts were established, Nunes admitted that she didn't buy and tried to say she took the ticket but took it by accident. Then Nunes went on the run for 2 weeks to avoid being arrested. Like that ever works. She was eventually apprehended, and at the time of this video, she was awaiting trial. Paul Little was eventually contacted by the Lottery Commission and given his winnings. He said that he would use the money to pay off his mortgage and would also give some of it to charity. Obviously, Carly shouldn't have been deceptive about the ticket. But what do you do in her position? Number 5, the Greediest Man Alive. Edward Putman scammed the Lottery Commission to bag a £2.5 million jackpot and then continued to collect disability benefits despite his win. Putman had applied for the benefits back in 2000 when he claimed that he was incapacitated by anxiety issues. He continued collecting benefits for 9 years until he missed a medical checkup. His benefits were suspended as a result, but Putman didn't need them anymore since he'd won the £2.5 million around the same time. The win should have meant that Putman didn't have to collect benefits anymore, but Edward Putman wasn't satisfied with just being a millionaire. He still had his eyes on that sweet benefits package. So he wrote a letter to the authorities in 2010 requesting that they reinstate his benefits and even backdate them. The authorities went for it, and Putman was able to continue enjoying benefits he did not need. But the court got suspicious when Putman tried to purchase his council house, which is essentially low-income housing run by the government in the UK, under a right-to-buy clause. This raised eyebrows since someone collecting benefits shouldn't have the cash to purchase a council house under the scheme. So, court-appointed investigators started snooping around and checking bank records. They discovered that Putman's account had received millions of pounds just a year prior, so he shouldn't have had any benefits at all. When they asked about all this cash, Putman just said he hadn't spent any of the money he'd gotten from the benefit scheme and had planned to refund them. Right. In total, Putman received around £13,000 in benefit payments during the period after he had won the lottery. Meanwhile, he had spent his lottery winnings on a lavish £600,000 detached home. He had also bought 2 sports cars. But Putman's benefits weren't the only criminal things about him. An investigation was launched into Putman and discovered that his ticket was probably faked. The investigation concluded that the only reason Putman was able to successfully claim the lottery winnings was because he had colluded with a lottery insider, a guy named Giles Nibs. After the win, Putman had haggled with Nibs over a £900,000 cut, which led to pretty nasty fallout between the conspirators. The dispute had impacted Nibs so severely that a year later, he decided to end everything. Nibs' partner argued that his demise was a direct result of Putman's greed and that the guilt and shame were too great. Putman's greed didn't stop at just forging lottery tickets and collecting fraudulent benefits. When he finally decided to sell his council flat, remember the low-income housing he now owned but didn't need, he haggled like crazy over a measly £2,000 on an offer put forward by an elderly couple. Putman even tried to keep the price of the apartment up by including old bedroom furniture in the offer. Putman eventually did have his day in court and was sentenced to 2 months in prison for benefits fraud. He was also convicted of defrauding the lottery and may see a further 6 years in jail if he doesn't transfer all his assets, worth almost £1 million, back to the lottery authority, which honestly seems a little bit light considering the damage he caused, doesn't it? In his final hearing, the judge said that Putman's greed was the cause of his troubles, and if he had paid Nibs his cut, he may never have been found out, and Giles Nibs might still be alive. But instead, Nibs ratted him out just before taking his own life, eventually bringing Putman down. Somehow, we doubt that Putman will stop being so greedy anytime soon. Number 4. The stolen winnings. Iris Amador Argueta stole the winnings of her cousin's $1 million lottery ticket after he entrusted her with the task of claiming the prize. Her cousin, who wasn't named, won $1 million off of a $5 lottery ticket. He wanted to stay anonymous, so he gave Iris the ticket and asked her to claim the prize for him. The original agreement was that he would give her $50,000 out of the total prize money. But Iris had other ideas. She wanted to claim the money for herself. So she took the ticket, claimed the prize money, and then forged documents claiming that the prize was just $20,000. She then chose to take the lump sum, which was about $537,000. When she returned, Iris handed her cousin an envelope with $13,436 in cash and told him that was what remained of the total prize money after tax deductions. Her cousin took the money, but soon learned that he had been tricked when a statement on the state's lottery website said Iris had claimed over $500,000. The victim got in contact with Iris and asked for the rest of his money, but Iris told him that she didn't have any money left and that if he bugged her again, she'd get the police involved. Thankfully, the victim in this case called Iris's bluff and got the police involved himself. The police quickly got to the root of the matter and recovered over $300,000 of the stolen winnings. Iris was also arrested and is now facing grand larceny charges. If convicted, she faces 15 years in prison. You can't help but wonder why Iris believed she would ever be able to get away with such an obvious theft. And it's not like $50,000 is anything to be disappointed about. Stupid. Number 3. The roommate spat. Sandra Jean Crow got herself in a heap of legal trouble when she helped her roommate, Alvin Hans Larson, claim a $30,000 lottery prize. Alvin didn't claim the money himself because he had some outstanding debts and he didn't want them to be deducted from his winnings. So instead, Larson sent his roommate Sandra to get it for him. Crazy thing is that Sandra and Alvin probably would have gotten away with it if they hadn't started bickering like children in front of cops. 1 month after the win, the police responded to a disturbance call at Sandra and Alvin's home, where they found Larson packing his things to move out. The police stood by, keeping the peace, while Larson and Sandra bickered. Then, they overheard some things they weren't meant to hear. Sandra was saying that she wasn't entitled to the lottery win, and that she merely cashed it in. They also heard her saying that Larson had begged her to cash in the prize because he didn't want to pay the money he owed. The police later interviewed Larson about the matter, and he confessed that he had tried to evade some debts by giving the ticket to Sandra. The pair's little bicker fest earned them some lottery fraud charges courtesy of the police. Had Larson not been greedy and just paid off his debts, he'd be better off. Greed can be good, but it rarely works out. Like the philosopher Biggie once said, "Mo money, mo problems." Number 2. The heartless attempt. Narendra Gill stole a deaf customer's winning lottery ticket so she could claim it for herself. The deaf victim, an elderly man named Frank Gowland, had the winning lottery ticket for £130,000. Frank had taken a bunch of lottery tickets to the shop where Narendra worked to check if he'd won anything. And good for him, right? We buy lotto tickets and just assume they didn't win half the time, so we don't even bother checking them. Shout out in the comments if you're the same. Anyway, Narendra checked his tickets and discovered that one of them was a winner. But instead of giving the pensioner his ticket, she swapped it with another worthless ticket and returned them, saying that none of them were winners. After he left, Narendra phoned the lottery commission and tried to pass off the winning ticket as her own. She claimed that she had been given the ticket as a gift and didn't know where it had been bought. Unbeknownst to her, the staff of the commission somehow heard that she was trying to check the ticket out for someone else. This is against the rules. So the staff called the police, and the police checked the CCTV footage of Narendra's shop. That's when they discovered that the ticket in question belonged to Frank Gowland, not Narendra Gill. Frank eventually got his winnings, and of course, he was overjoyed. He used his winnings to purchase a new car and build a walk-in shower for his disabled wife. Narendra was arrested and sentenced to 28 months in jail for theft and fraud. If you're enjoying this this video, be sure to stay tuned right here for our past release on why you actually don't want to win the lottery. Number 1. The 10% Scam. Ali Jafar and his sons ran a lottery scheme that saw them earn over $1 million in tax returns and over $20 million in lottery winnings. We've covered this story before, but we have an update. To catch you up, Ali Jafar and his sons Yusuf and Muhammad Jafar started a 10% scheme where they purchased winning tickets from their original owners at a 10% discount and then submitted those tickets to claim the prize. But why would anyone sell their winning lottery tickets for a 10% discount? That's the genius of this scheme. When people win lotteries, they usually have to pay a lot of taxes on them and may not be eligible for tax refunds, or their winnings could be offset by back taxes or child support. But by selling their tickets, the real winners get their money without it being garnished or taxed. The Jafars circumvented this situation by also filing fraudulent and extensive gambling losses, which offset the taxes that they had to pay on their lottery winnings. This meant that whatever money was deducted for taxes was usually paid back as tax refunds due to those gambling losses. It's a win-win situation. So how many times did these guys run their scam? 10 times? 100? 500? Maybe 1,000? Try again. The Jafars cashed in over 14,000 lottery tickets, making them the most prolific lottery ticket winners in the state's history. What are the chances of people from the same family winning the lottery 14,000 times over 11 years? You may think the answer is at least not zero, but the truth is that the chances are functionally non-existent. It was obvious to investigators that the Jafars either had a genie or there was something shady going on. Once lottery officials discovered that the Jafars' unbelievable winning streak, they were temporarily banned from buying tickets. So, the Jafars sued the lottery authorities, claiming that they had the right to win endless tickets. A judge disagreed. Investigations by the Lottery Commission discovered that the Jafars had made over $1 million in tax refunds through the filing fake gambling debts. They had also cashed in over $20 million in lottery winnings. The Jafars were soon arrested and faced counts of conspiracy to defraud, commit tax fraud, and conspiracy to commit money laundering. They were found guilty. They have to forfeit over $88,000 in lottery tickets, or the equivalent may be taken from their portfolio. That's a shame. Maybe this time they took it a little too Jafar. Here are a few of the worst things that happen with winning the lottery. Number 7. Willie Seeley. When wild Willie Seeley and his wife Donna won a share of a $450 million jackpot, they thought that they could finally slow down and live life the way they always wanted to. Willie dreamed of spending his days hunting, fishing, and watching NASCAR without having to worry about how he'll pay his bills. With a boatload of cash on the way, it seemed like he and his wife could do just that. But reality rarely meets our expectations, and the Seeleys' new life was fraught with more stress and complications than they bargained for. First off, the money was not as overwhelming as the humongous jackpot implied. The $450 million pot was first divided between 3 winners. Then, Willie and 15 of his co-workers, who had all bought tickets in a workplace pool, split their share. Willie and his wife walked away with $4 million after taxes. While all of us would love to deposit $4 million into our accounts, it wasn't the mind-blowing fortune they thought they'd won. Still, the Seeleys were able to leave their jobs, buy themselves a couple of new cars, and fix up their house, which had taken a beating during Hurricane Sandy. So, what was the issue? Well, it seems with all the media attention that came with winning the lottery, there came an endless stream of people looking to get their hands on the Seeleys' money. Their home phone rings non-stop as long-lost family members and scammers line up to take their shot at a piece of the winnings. Willie has even brandished his shotgun at unwanted visitors on their property on multiple occasions. While the Seeleys are thankful for the money they received and the freedom it granted them, they could certainly do without all the strings attached to that much cash. Number 6. The Griffiths. In 2005, Laura and Roger Griffiths won the lottery for £1.8 million. Their lives were forever changed, but not in the way they hoped or expected. While the piles of extra cash allowed them to splurge on luxuries, their financial situation grew increasingly more complicated before it completely bottomed out with the economic recession of the late 2000s. That certainly wasn't a concern of theirs to begin with, though. They bought themselves a gorgeous stone mansion in Yorkshire, England, where they live with their 2 young daughters. Parked outside was Roger's slick Porsche convertible, which sat next to his wife's Lexus 4x4. Laura used £500,000 to start her own beauty salon. On the other hand, Roger quit his steady job to be a stay-at-home dad and watch over the family's finances. When he wasn't doing the laundry or investing the winnings, he was practicing with his old rock band, which got back together after Roger bought them all expensive new equipment. But instead of becoming the rock star he always dreamed of, Roger soon found himself separated from his wife, forced to move back in with his elderly parents, and with only 7 pounds to his name. What in the world went wrong? Turns out, Roger had been making some questionable investments with the lotto money that had left over after all their lavish spending. He squandered the winnings, and the tanking economy made things even worse. After Laura found emails suggesting Roger was cheating on her, the end of the Griffiths fairy tale life had officially arrived. Roger moved out and is no longer in contact with his wife and children as he tries to salvage what little he has left. Laura sold their dream home and her salon, where she still works, to try and pay the bills and support her daughters. What started as an unbelievable stroke of good fortune ended up destroying an innocent family's life, leaving them worse off than they were before. Number 5. Jeffrey Dampier. When you hear about lottery wins gone bad, it's usually the case that reckless spending got the better of the lucky winners. But for Jeff Dampier, his tragic story is an example of what happens when greed overtakes the people around the winner, and their desire to get a slice of that cash pie overrides all else. Jeff and his ex-wife won $20 million from the Illinois lottery back in 1996. When the couple got divorced, they split the winnings 50-50, and Jeff moved down to Tampa, Florida with his second wife, Crystal Jackson. Jeff used a good chunk of the money that remained to open a popcorn company called Cassie's Gourmet Popcorn, which he named after his daughter. But he also wasn't shy about sharing his wealth with those around him. He often treated his wife's family to generous gifts and even financially supported her 2 sisters, Victoria and Terry. How did they repay his generosity? They took his life. Victoria Jackson and her boyfriend Nathaniel came up with a nefarious plot to get their hands on Jeff's winnings. They asked him to help out with car troubles at their apartment. When he got there, Nathaniel tied him up and demanded he fork over all his money. In the end, Victoria shot her brother-in-law. Rather than get a piece of the hefty jackpot, Victoria and Nathaniel both got hefty prison sentences. Multiple life sentences, to be exact. Jeff Dampier's story is a reminder that those around us, even family members, don't always have the best intentions, especially when there's that much cash at stake. Number 4. Susan Mullins. Winning the lottery is hard enough. Spending your winnings wisely is apparently even harder. It also doesn't help when greedy collection agencies take you to court for all you're worth. Take Virginia lottery winner Suzanne Mullins, for example. Suzanne won $4.2 million in 1993 after buying a ticket on a whim at a convenience store. She vowed to be smart about the exact cash she was awarded and claimed she would avoid blowing through the money too quickly like so many other lottery winners do. The pot was split 3 ways between Suzanne, her husband, and her daughter, so the annual payment she'd receive was roughly $47,000 once a year for 20 years. Suzanne essentially had an entire year's salary coming in the mail every year. That would prove pretty helpful to any family trying to pay through their monthly bills, wouldn't you say? Well, in the end, Suzanne was not nearly as wise with her spending as she originally promised. 5 years later, money had gotten so tight for her after exorbitant medical bills related to her sick son-in-law. She took out a loan from the People's Lottery Foundation, which lends financial aid to lottery winners who need more cash than their annual payments allow. The foundation lent Suzanne $200,000. The situation grew more complicated when the lottery changed its rules about lump sums in 2000. Now, winners could claim all their money at once instead of receiving yearly payments. Suzanne elected to do just that, thinking she could pay back her loan and carry on with her life. The People's Lottery Foundation had a different opinion, claiming she violated the terms of their agreement. Since they were relying on the interest tied to her loan to make money, Suzanne paying it back in bulk cut into their bottom line. They took the lottery winner to court and gouged her for an additional $150,000 in penalties. Suzanne, now drained of all her winnings, was now $150,000 in debt just a decade after becoming an overnight millionaire. Number 3. Denise Rossi. After winning the lottery, things like smart investments and trips to Las Vegas moved to the top of the winners' to-do lists. Denise Rossi, on the other hand, decided to get a divorce. Just 11 days after winning $1.3 million from the California lottery, Denise abruptly ended her marriage of 25 years. The catch? She didn't tell her husband Thomas that she had won the lottery. She kept that rather important detail completely hidden during the legal proceedings. 2 years later, Thomas caught wind of his ex-wife's good fortune. He got a letter in the mail from a company offering to pay lump sums to lottery winners. There was just one problem. He didn't win the lottery, or so he thought. Within days, he had uncovered his ex-wife's plot to hide the money she'd won while they were still married, and he took her to court to get his rightful share of the cash. Denise's greed and deception ended up costing her every penny she won from that lottery ticket. The judge, appalled by her behavior, ordered her to pay her ex-husband $60,000 a year for the next 20 years. Per California marriage laws, lottery winnings are considered communal funds between spouses. Thomas was entitled to half the money because she bought and cashed the ticket before they were legally separated. Her decision to keep her lottery winnings a secret from her husband of 25 years ironically ended up ensuring he'd receive it all. Ouch. Number 2, Amanda Clayton. You may have heard that winning the lottery should not change the way you spend your money, or else the winnings will run out rather quickly. It's why you often see winners choose to keep their jobs even with the influx of cash. Michigan lottery winner Amanda Clayton took this advice to the extreme. After receiving more than $700,000 from a winning lottery ticket, Clayton continued applying for and receiving food stamps and unemployment benefits. While still technically unemployed, the programs she was mooching off of are designed to help people who genuinely need the money. She obviously did not. She was charged with food stamp fraud and put on temporary probation, but the story only gets crazier from there. Clayton had been engaged in a longtime feud with two of her neighbors, Candace Combs and Victor Bartolo. The battle apparently got so serious that Combs accused Clayton of hiring 3 hitmen to go after her and Mr. Bartolo with the money she won. While the lottery winner denied the accusation, 2 men were charged with assault concerning the attack on her neighbors. Clayton herself wasn't charged, but she did walk away with a few scrapes and bruises. The feuding neighbors were the Hatfields and McCoys of Lincoln Park, Michigan, but their dispute was never settled. Clayton was found dead just a year after their physical altercation. Details regarding her death are hard to come by, but it's been said that Amanda's lottery winnings had dwindled before she died. Number 1, Kenproxmere. All the way back in 1977, Kenproxmere won $1 million jackpot, which comes out to about $4.5 million in today's money. By the start of 1981, Ken had filed for bankruptcy. How did he burn through all that cash so fast? Ken's story tells of unwise spending going completely unchecked. Ken was set up to receive $50,000 a year for 14 years. To him, that meant he could totally change his lifestyle to fit his newfound wealth. He bought a new car, some fancy clothes, and moved his family from Detroit all the way out to California so he could live like the high roller he believed himself to be. His dream was to own a bowling alley, but that dream proved too expensive with even his lottery winnings. He had a compromise, settling on a pool hall instead. He opened the doors on his pool hall in December of 1977 and even launched 3 additional outlet stores to sell pool tables. However, his cross-country move, lavish spending, and business boom proved too much too fast. Sales took a nosedive in the years that followed, and Ken found himself in the hole for business loans and credit card debt that he could not afford to pay. Apparently, pool tables were not flying off the shelves like they used to. The mounting financial pressure came to a head in 1981 when Ken officially filed for bankruptcy. He said he learned many valuable lessons from his mistake-filled past and even had plans to write a book, though it's unclear whether that ever materialized. The moral of Ken's story? It's easier than you think to blow through $1 million if you're not careful. Just take it from Ken himself, who, when asked about his advice to future lottery winners, said, "Crawl into a hole and pull the top in." Click to watch one of these next videos. Let us know in the comments section what you'd rather do if you ever won a giant lottery. Take the annuity or take the lump sum.